Welcome to your Pipsy 2023 Media Box. I'm Imandra Petty.
And I'm Tui van der Spey, the CEO and co-founder of Block Markets Africa.
Toby, it is so nice to have you with me. I know it's the end of a long day, but this is a subject I really wanted to get into because there's so much buzz about it. We're talking about CBDC, so explain this concept of these central bank digital currencies.
Well, central banks around the world are actively exploring how they can issue currency, money that they issue directly to the public using new types of technology. And the specific technology that seems to be winning out in their conversations is blockchain technology. So central bank digital currency is really what you would in South Africa consider a rand that you would have in your pocket, like in a note or a coin, or the money that a commercial bank would hold at SAMOS, which is our South African multi-option settlement system, which we call wholesale CBDC. So any money issued directly by the central bank, and CBDCs would be available in two forms: in retail form, i.e., so that you, and myself could hold it and pay for it, use it to pay for bread and pay for airtime, and also in a wholesale level where big banks could use it to settle transactions between themselves. But what's exciting for me about CBDCs is the fact that it's actually paving the way for a larger category called the tokenization of money. And this is exciting because it's opening up the doors for commercial banks and for private money issuers to actually create their own money on a blockchain technology that can work next to the central bank, much like we currently have our commercial banks giving you money. Like what you see in your app when you check your internet banking, that is a commercial bank money. Did you know that the money that your bank issue is not the same money as that other banks issue? It's actually issued by each bank. It's a different kind of money. And what these banks do is they use central bank money as a way of paying between themselves. So a simple example that I'll give you is if I'm with Bank 1 and you're with Bank 2 and I pay you 10,000 Rand, what's actually happening is between me and my bank, there's an arrangement that says that they owe me 10,000 Rand less. They make an arrangement between them and your bank and pay your bank 10,000 Rands of central bank money, and your bank pays you 10,000 Rand. So showing up in your account. So you actually end up with your bank's money, and I started with my bank's money. But the intermediary was central bank money. And most of our transactions in the world today actually operate this way. Now, central bank digital currency in this construct could do one of two things. If banks adopted central bank digital currency, they would use central bank digital currency for wholesale purposes to pay each other. So instead of using SAMOS, or our real-time gross settlement system, to effect that payment, they would use a central bank digital currency on a blockchain to pay from one bank to your bank. But what would happen as well in a retail CBDC space is you and I could actually hold that token ourselves. So I could hold central bank digital currency, 10,000 Rands worth in my wallet, and I could pay it directly to you, Iman. And there would be no need for the bank to be intermediated in the process.
So is this an existential threat for the banks?
Could be, and this is why there's so much discussion about whether they'll do it or not. And with respect to all my friends at the regulator, why they are very, very clear in saying that they have not made up their minds whether they will do this or not. And that's what excites me about the technology space, because while they're figuring out if this is the right thing to do and to potentially compete with the banks, what is happening is it's clearing up the way for banks to start utilizing the technology themselves, and thought-provoking innovation coming out of the fintech sector to use the same technology to help customers and South Africans in their normal day-to-day lives.
You use possibly the most important word in all of this, and that is the customer. Big buzz around CBDC. Is it practically that big for customers today?
Well, there's two answers to this. So first is, if you're a Chinese citizen, then you're already starting to see the impacts of this, because the digital yuan in China is by far the most successful central bank digital currency issued to consumers in the world. But with it comes very interesting connotations. The first is social credit and social score enforcement. And this is a scary thing, because in China, if you don't maintain a certain level of social credit, your money stops working. Your central bank currency is no longer able to be used for payments. So you have to conform to what the state tells you in order to use your payment system. Now, we luckily live in a much more free state than the Chinese market does, and also need to qualify, in China, this is not the norm. The CBDC, the digital one, is only rolled out in parts of China. But it is a bit jarring to think about the impact of the state having that level of control over your money. And this is where I think the conversation comes up that CBDCs are most likely going to be used in social grant applications, where you have a social grant that you're claiming for the state. And there's interesting things that can happen. The state could give you a grant and give you 1,000 Rand a week, but you have to spend it that week. You can't save it, to ensure that it's not led into an investment that derails the economy, as an example. So you spend it on bread and food, and it's only transactable for the kind of things that you would buy for sustainable and basic lifestyle goods.
Well, to extend the China example, we're not there, and I have to add the word dot 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 and yes, yet. So that concept of whether we could find ourselves in that construct with that application, giving the state the possibility to manage how we would spend our money. And you use the grant example, very, very apt for us to be able to understand it in real terms.
But as a normal South African, the use of central bank digital currency in your life would be unlikely. What you're much more likely to experience is commercial bank digital currencies. So these are tokenized deposits, or you can think of them as bank stablecoins. And these instruments would make payments easier for you at stores. Now,
But Toby, let's simplify, right? Because not everyone understands stablecoin as a crypto, and why that one and not the others. And also the concept of tokenization. So just break that down for us very simply.
Great point to make, Iman. So the big thing is that money is really always just an accounting entry. It's hard to wrap your head around this because we think of money as a thing. But money is a liability. It is a promise to pay you. That is actually what that promise to pay is what we hold. If you go and read your Rand notes, go and have a look at your notes, you'll see.
Give the tender, the hold.
Exactly, yeah. And in the UK, the pound note actually says, pay upon presentation this bearer £5. So it's literally a promise to pay. Now, we don't have to think about it in our day-to-day because money works. And as long as the money system works, everything is great. When it stops working, things get a little bit more concerning, like we've had 2 banks in the last 20 years in South Africa fail. And that hurt a lot of people. So when banks fail, when we see these kind of ruptures in the economy, that's when we start asking ourselves, what is the money that I'm actually holding? So tokenization is another way for money to be created. It's still an accounting entry, but it's using the blockchain as the bookkeeping system. So instead of using an Oracle or a SQL or some kind of a SAP application that the banks currently do to keep a track of who has how much money in their bank accounts, you use the blockchain to do that. And the blockchain doesn't have to hold cryptocurrency values. It actually can hold something called regulated liabilities, which is just the money that we spend. This is the money that your bank issues to you, or the money that the central bank issues to the commercial banks, as an example.
So the difference, though, is that in the blockchain, that's a public register. So it's transparent. We can all see it, but not necessarily with the alternatives in sort of the analog.
And this is the status quo. So right now, banks issue money, and they're regulated to practice something called fractional reserve banking. And lots of crypto fundies say this is a very, very bad thing because the banks are insolvent. The reality of this is that commercial banks must practice fractional reserve banking because that's how they invest in the economy. When we have money at the bank, what we're doing is we're saying to the bank, you should go and invest this in the economy and make sure that when we need to draw this money from you, you have enough liquid money for me to draw from you. Now, tokenization can create a very transparent picture of what that risk may be. So it makes it easier potentially for regulators to look at how the compliant commercial banks are in enforcing these regulations. But this is where it gets really exciting, because if we can transparently show how a commercial bank is managing their reserves using the blockchain, that means we can do that for a private company. And this is an interesting idea. Private companies can issue money as well. And these are the biggest stablecoins in the world, are private money issuers. There's 2 major companies. The largest by far is a company called Tether, US dollar Tether, USDT. And there's over $80 billion of deposits around the world in that cryptocurrency. And the close second, well, it's actually very far second, is Circle with just $30 billion. So $110 billion of deposits between the top 2 dollar stablecoins in the world. But this is just private money. That's the first thing to understand. It's not the technology, it's privately issued money. It's money that's not created by a bank or a central bank. It's by a company. Do you want to get together with me and start a company, or we can issue money? Because that's actually the same thing.
Yeah.
So what makes that a very scary proposition is, Iman, I don't know about you, but I'm not licensed to be able to manage reserves properly. I don't have an actuarial degree, and I don't know if you do. So is it a good idea?
Maybe next week. Check back with me next week.
Well, on that basis, is it a good idea if you and I are able to issue money? And this is the fundamental challenge that we're now seeing, that this technology is opening up. It's allowing people like you and me to go and create money. Now, is that money of good quality? Well, I wouldn't bet that money that you and I go about and create is necessarily going to be good money, because we're not specialists at it. But there are specialists in the private sector that can create good quality money. And the technology now opens up the world to some brilliant minds to create new kinds of money that solves new kinds of problems in fundamentally new ways that commercial banks just don't have the time and energy to go and pursue.
All right. So, let's talk about the central bank then. Why is there this level of guardedness?
Well, I think it's because the quality of money is something that South Africans don't need to understand because the money system works. So the central bank is trying to make sure that the money system keeps on working, and by protecting us from many, many risks that could come in if people with bad agendas end up creating money. Now, commercial banks issuing tokenized deposits or bank stablecoins, that doesn't represent a really material risk. But what if I could take that stablecoin and swap it into Bitcoin very quickly and move it around the rest of the world and disappear with the money? Those are the questions the regulator wants to be very clear on, and understanding what the risk is to South Africans from a money laundering perspective, and also potentially from economic stability. If a hostile nation was able to attack our financial system and there was ways of escaping with value by using cryptocurrencies as a connection to our central bank currency, that could potentially be very dangerous. So it's really important that our regulators take their time and study these things properly. But at the same time, our innovation, our fintech space, needs to be pioneering new things to keep us right at the cutting edge of the market. Because there's scenarios where China could bring their digital yuan into Africa. The next loan that's granted for a port or a bridge or an airport to be built could be granted in digital yuan. And that could lead to African citizens across our continent actually using Chinese central bank money if we as Africans don't actually move forward and adopt this technology.
So, what is the opportunity then? And that's where we'll end. I wanted to bring it back to the customer, which is how we began. What's in it for the consumer or the customer if it pans out in the ideal way as you suggest? But also, instead of the Chinese yuan, what about other currencies on the African continent? Potentially even a single currency for trading across the continent. What are the possibilities?
Iman, that's the right question to be asking, because there's a lot of opportunity for people to pay each other if they don't have to pay through an intermediary. So in Africa, what we see is a tremendous amount of our GDP value is extracted out of the continent, not because of bad trade arrangements, but simply because our monetary system is predominantly driven for offshore transactions. So what we could do is, if we could create true intra-African trade, is potentially save a lot of transactioning costs and a lot of liquidity challenges that we have right now, because we must hold a lot of dollar liquidity at the moment as Africans to trade with each other. And there's a shortage in Africa on dollars. We don't have enough dollars to go around. So there's a stat that's very interesting. 1 versus 7. There's, for every $7 traded internationally between Africa and the rest of the world, only $1 is traded between African neighbors. And it's because Africans still want dollars and we don't have sufficient dollars. So these type of technologies, whether it's a multi-CBDC environment or a new type of commercial bank stablecoin or a privately issued African currency, all of these things become possible with tokenization, and they could ultimately lead to massive economic upliftment to people that could previously not afford to participate. I just want to add very briefly, if you think about paying at a store today, you pay with a card, and those card transactions cost quite a lot of money. What if that transaction was basically free? Most of the benefactors of those transactions, if you look at our card companies, are not South African based. And those transaction fees ultimately are not enriching South African actors. So this technology could potentially, firstly, make sure what fees are generated is invested back into the South African economy. But secondly, it could substantially decrease the cost of payments. And it could decrease it to the tune of 1%. So 1% on 100 Rand spent at a shopping basket, 1% extra. If you think about South Africa has R1 trillion of retail payments every year. So 1% of R1 trillion is a lot of money. It's 10 billion Rand.
I was going to give the same answer. I guess it leads to one then final question is, what is the regulatory status of tokens?
Cautiously optimistic. So what we've seen is the central bank in South Africa, the South African Reserve Bank, has done tremendous work to engage industry, to build specific programs like the Project Corker program that we were involved with, in order to discover the impact of tokenization and decentralization on financial market infrastructures. But the regulator is very careful to say anything is okay before they truly understand it, and that's very, very wise. The one thing that they have done, which has opened a lot of opportunity for innovation, is this CASP, or Crypto Asset Service Provider licenses that you can now apply for from the 1st of July. So it's still very, very new, and a lot of innovators have just started this process. But this license, in essence, makes it legal for you to sell cryptocurrencies, buy cryptocurrencies, hold wallets for customers that have cryptocurrencies, and offer a range of services on top of that. And if you think about tokenized money, it falls into this category of cryptocurrency. It's just in my opinion, a much better type of cryptocurrency than a cryptocurrency that you really wonder about what its value is going to be tomorrow.
Toby, I have enjoyed this conversation so much. I feel like we could have gone on for a whole hour and not run out of subject matter. But thank you for making it accessible for us to understand and to look at both the opportunities and why there is hesitation in certain markets for its straightforward adoption. Appreciate your time.
Thank you so much, Iman. It's been a great pleasure. Cheers.